Good morning and welcome to today live Forex and Synthetic Indices trading section. So if you're here for the first time, my name is Vetexx, and what I do on this channel is analyze the synthetic market coupled with the Forex market every day from Monday to Friday, sometimes 6 a.m., sometimes 10 a.m. So depending on the time you're watching this video, uh, first of all, before I go right into the today analysis, if you're joining for the first time, do well to like, do well to subscribe, and don't forget to join our Telegram channel where I'll be sharing market outlooks and then trade signals. Whenever trade we want to take, I'll be sharing with you guys when to enter, when to exit, and a whole lot of that. So, for the sake of this today's analysis, we start with market reviews, where the market we anticipate earlier, whether it's played out, whether it didn't play out, the reason for it, and then we'll look at for a new outlook for the day or the one we anticipate for the week. Okay, so if you have any question on the course of this analysis, do well to drop your question in the comment section and I'll do it to also answer you. So we'll start with the market review for today. Okay, so this is my chart, and today I'll be analyzing up to 20 pairs or 15 pairs, basically the volatility indices and the step indices. Okay, so the best way we are look for the market review, I'm going to start with those ones that we anticipated yesterday, which is a V, I think it's V15 index. Like I always talk about V15 index. Okay, this particular pair means entry. All right, so this is what we have on V15 index. We have, let me take this out. So after showing you this market review, I'm going to be explaining the model, why I mark I have this markup like this and why the price didn't come back and all of that. So first of all, from the market structure that we trade, which is structure and liquidity, it's also known as the algo market structure, we always have two sweep of liquidity and two break of structure. That is what make our setup to be A plus setup. And mind you, we only trade the A plus setup, which is the type 1 and also the type B. So we have this sweep of liquidity, which is used for correction, and we have this structural liquidity, which is used for continuation. So these two must be present for our setup to be one break of structure. So since this structural liquidity, which is this, since it's taken out, price will always, once it's one price take it out, it always have to continue to the opposite direction. So once price do this setup, so since price move, we have this now this becomes our liquidity. So this will become our new liquidity, which price need to take out again on the 1 hour time frame, and then this will become our protected high. This is going to be a continuation inside this continuation, and then we have what our new point of interest, which is this. Let me, our new point of interest, which is this. So once price tap into this higher time frame point of interest, we always anticipate another move, another structure like this. This structure we see on the higher time frame is what we anticipate in this zone. So price will have to return back into this zone, take out this structural liquidity because it is used for what continuation, and then price will sell to the opposite direction. Okay, so for the case of this one, we have exactly this structure form here, but price didn't compare, we missed the entry. Okay, so let me take it to 1 hour time frame and then show you how we missed this entry. So you can see clearly here, and put it on the 30 minutes. So if you focus clearly here, you see that we have what we have a sweep of liquidity which is here. There's a tiny sweep of liquidity around here, and then we have this as our what structural liquidity, which is this, and this is what our protected high. Okay, now price just work out the structural liquidity and continue the sell to the opposite direction. All right, and then there is a confirmation we need to look out for in a zone inside this point of interest, but price didn't give us that confirmation because there's also up to like 2 to 3 confirmation we always need to look out for in this point of interest. All right, so for the purpose of this video, I'm not going to be going so deep inside this confirmation entry that I look out for my point of interest. Okay, so that will be another section on it on differently. So price will tap into this point of interest and then give you confirmation and then sell off. But price didn't get to the point where I want price to get to. So this is like a missed entry. And once price does that, on the 1 hour time frame, I was going to swing this sell, but price is wrong with this. I was going to swing this, but price never came back. Take profit level. So this is the threshold liquidity that I was taking out. So this is a price mix entry. Let me take this out. So price was supposed to tap in here and then sell off from this zone. So swinging this trade will give you a reward. What is the setup here when we didn't come back to our zone? I was thinking it was going to come to this zone and sell off, but that did not happen again. Okay, so this is what you have been looking out for the past for this throughout this week. This is the only setup, most valid setup that I anticipate for it to come. But now we are going to start with the new outlook for the day, and then I'll show you what we should expect for the new market outlook. Okay, so before I dive in right into the whole process, I'm going to be explaining market structure, and basically breaking down the market structure I trade and show you exactly what you need to do. Okay, whenever you want to do your own analysis and learn more about it. So first of all, we always have price giving us a series of higher high, higher low, and then we have a liquidity here like this. Okay, now for based on the rules of the advanced market structure, there must be a sweep of liquidity. So this liquidity needs to be taken out. Okay, so now that this is taken out, this becomes a sweep of liquidity, and there must be a break of structure to the opposite direction. Now we have this break of structure to the opposite direction, and the rule number 3 says that there must be a 50% retracement. Okay, this is a 50% retracement to the opposite direction, and then there must be another break of structure to the opposite direction, which is this. And what happened? Remember, this is the structural liquidity and this is the transactional liquidity. So this is the first sweep of liquidity. This first liquidity need to be sweep, and this second one too need to be sweep. And then we have price taking out this liquidity. And once price take it out, what happened? Price will continue to the opposite what direction. So now we have our what sweep of liquidity, and we have what first break of structure. We have what our protected high right here, and then we have structural liquidity here, and then we have what second break of structure, which is this, and this zone becomes what our what point of interest. So this is rule number 1, there must be a sweep of liquidity. Rule number 2, there must be a break of structure to the opposite direction, Rule number three, there must be a 50% retracement. And rule number four, there must be a second break of structure to the opposite direction. And rule number five, price must take out the structural liquidity and continue to the opposite what direction. So this is what we look out for on higher time frame. Once you see this on the higher time frame, we'll scale down to the lower time frame and look out for our continuation entry, either from the weekly, the daily, the 20. So once we get this, the same thing you look out for when you want to sell is the same thing you look out for whenever you want to buy. Okay. Same thing you look out for when you want to sell, the same thing you look out for whenever that you want to buy. Okay. So from this, once you see this pattern like this on the weekly time frame, on the 24-hour time frame, the next thing for you to do is to look out for your continuation entry on the lower time frame. So take for example, I want to sell this pair currently. Now, what I'll look out for now is for my continuation entry. Now, this is a buy. This structure that I'm seeing on the higher time frame, I'll look out for this structure on the lower time frame. Okay, such a way. This is how it's going to look like in the lower time frame. This, I have my what? Uh, Sweep of liquidity, first break of structure, structural liquidity, second break of structure, and then this. I'll have this. Now, let me take out this blues stuff from it. So it's going to be something like this on the lower time frame. So if this is the 4-hour time frame, all right, if this is the 4-hour time frame or the 24-hour time frame, I will look out for a continuation on the 1-hour time frame, which is going to be this way. Okay. Now this becomes my what? New sweep of liquidity. This is going to become my what? Structural liquidity. This is my what? Protected low. And here this becomes what? Point of interest. What is the next thing for me to anticipate? So just to put my long tools here. Let me take this out. What is wrong with this thing? This I have this structure, the continuation structure on the lower time frame. Take for example, this is the 4-hour time frame, and then this is the 1-hour time frame. All right. I will anticipate price to come into the zone and then buy to the upside. Okay, so the same thing I do when I want to buy is the same thing you look out for if you are selling. Okay, so this is basically how it works. Okay, this is the system. And based on top-down analysis, you must see where the price is coming from on the higher time frame first, and then you follow the trend. If you know that you are bullish or bearish on the weekly time frame, you have to follow that trend, that bearish move until price take out the target. So take for example, if this is a weekly time frame structure, this is going to be the starting point. As immediately price takes the structural liquidity, this is going to be the starting point, and then this is going to be what the finish point. So price will have to start selling from here until down here. Okay, price will have to start selling from this point here until take out this down zone below. Okay, So this is the system, all right? Like I explained, first of all, we need to have a sweep of liquidity, a break of structure, a structural liquidity, a second break of structure, and then price is tapping to the point of interest. Give you this same structure on the lower time frame. Then this is the higher time frame structure, and this is the lower time frame structure. Now, your higher time frame is used for your direction, and the lower time frame is used for what your uh, continuation structure, which is where you get your entry from. All right, because you can't enter a trade on the 4 hour time frame or the weekly or the 24-hour time frame. Your 1 hour continuation structure is what you are going to use for your entry. All right, so that is basically what I'm trying to say. All right, so today now we are going to dive into the chart and see if you will see what we are looking for. So starting from based on top-down analysis, all right, knowing where the price is coming from and where it's going to, I'm going to be starting with V10, V10S, and see where price is coming from and where price is definitely going to. All right, so this is what I have on V10S. All right, on the 24-hour time frame, where is price coming from? Price is bullish on the weekly time frame, bullish on the 24-hour time frame. So do we have a continuation on the 4 hour time frame? Let's check the 4 hour time frame since there is no structure on the 1 hour on the 24-hour time frame. So this is what we have on the 24-hour time on the 4 hour time frame on V10 on V10S. Okay, so we have this. So we have this structure like this, where we have, if you look closely, we have what a sweep of liquidity, which is here. We have a structural liquidity, which is here, and then we have what a protected low, which is here. All right. So this becomes what first break of structure, and this becomes what second break of structure. Now this is what we have. This becomes what our what point of interest. This becomes what our new point of interest on the 4 hour time frame. So what is the next thing for us to anticipate? We anticipate price to come into this zone and then give us our continuation entry before we start uh, begin to before we start buying to the upside. All right. So this is what we're anticipating. Price will need to come into this zone, give us continuation entry, and then before we can buy to the upside. So this is what we're anticipating on V10s. Right. So see, we are going to be on the lookout for this until it played out. All right. So this is what we have on V10s. V10s is bullish, and we have a 4 hour bullish structure that we are anticipating. Okay. So that is all with V10s. The next we are going to be checking is what V10. V10 on the 24-hour time frame is bearish, and on the 4 hour time frame, let's check. On the 4 hour time frame, V10 is bearish. So let's check 1 hour time frame if we see a structure. So yesterday when I was analyzing, we have a structure here yesterday where we have a sweep of liquidity right here. We have what a structural liquidity here. We have our protected high right here, and then we have what first break of structure which is around here, and second break of structure which was around this zone, and then this became our what point of interest on V10. Okay, so this is the starting point and this is the finish point. Okay, so on the 1 hour time frame, you can also spot that. Let me take this out. We have the continuation setup here, which is we have this sweep of liquidity, we have this structural liquidity, which is here. Let me take this out. And then we have what? Our protected high, which is here. And this becomes what? Our new point of interest. So we're anticipating price to tap into this zone. Tap into this zone and sell. So we're anticipating a price, the price you're supposed to have this on V10, but it has already smashed the target, and there is nothing we have here again. So we check out the next pair on our list. So V10S is bullish. You're anticipating this buy from the 4 hour time frame point of interest, and V10 give a structure, give you continuation structure, and then smashes the target. So we look out for the next pair, which is V25. Let me check. Okay, which is V15 index. On the 24-hour time frame, V15 index is bearish, and we have a continuation on the 4 hour time frame, which I explained earlier. The price give us a continuation, which is part of our market review. Price give a structure, a continuation, but never came back and missed the entry. So we have our protected high. We have our row number one. I call this row number one. We have our row number two, which is first break of structure. Row number three, which is the structural liquidity, and then row number four we have was our second break of structure, and this is what our point of interest here. And row number five, price taking out this structural liquidity and continuing to the opposite direction. So as price take out this structural liquidity, it was supposed to give us a continuation setup. It actually gave the continuation setup, but the entry was missed, and then price tanked to it to the opposite direction. So it's almost at the take profit level, which is here. So this is the starting point, and the spin point is here. This place I draw the black line. So this is the starting point, point A, and this is point B, starting point and finish point. So currently we don't have anything on V 15 index unless it give this maybe on the 1 hour time frame, then we anticipate another continuation to the downside. So this is what we are anticipating on index. But if it doesn't, then we'll sit on our hands until another structure form or something better comes up.